Markets were down across the board in the United States as we grappled with new coronavirus lockdowns, also some possibility that masks are going to be coming back in a big way as a result of the Delta variant, and of course a lot of news over in China here recently with their government cracking down on a lot of their technology companies that are kind of bleeding on over here to the United States. So a lot of different things going on in the news during the normal session. Then of course after hours tonight, we have an absolute avalanche of earnings announcements from some of the largest companies in the United States. So we'll get through all of that. Then we'll get into our trade application example, where I wanted to focus on a fairly mundane consumer staples-oriented dividend stock to sell a put on for our trade application example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee, and it's July 27th, 2021. First of all, if you're new, remember to go on over to our YouTube channel, click subscribe. While you're over there, check out our description area. That's where you can find our email distribution list, so that way you can be notified anytime we post these videos. You can also find our social media information down in that description area for those of you that like to watch these videos on YouTube. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee. I would encourage you to follow me if you're not doing so already. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see embedded in the logo in front of you. All right, let's go ahead and dive into today's activity. And as mentioned in the intro, we did have a down session here today. So I'm looking at chart 4B for those of you that are premium market scholars following along at home with your own charting package. You can see here we were down by 0.47% on S&P 500. Dow Jones was down 0.24%. NASDAQ Composite was the worst performer today. It was down 1.21%, and the Russell 2000 was down 1.13%. Now you'll notice that all four of our charts have a similarity in that not only were they all down today, but they all did have these long lower shadows, and that signifies that we closed well off of the session lows. In fact, with the Dow Jones Industrial Average, we gained back so much during the normal session, we nearly closed positive. Not quite getting there, but that's a fairly positive look there, generally speaking, when you close well off the lows of the session. Gives you the impression that if the stock market were going to be open a bit longer, we might have been able to push the levels a bit higher. Now, of course, after hours is perhaps a different story, but at the closing bell here today, there was some positive buying going into the market indices. And, you know, that's no small feat. I spent a lot of time in my dividend class today and also in a couple of my classes yesterday discussing the impact of some of the decisions from the Chinese government recently that's impacted financial markets and how things can potentially get a little concerning, even for us here in the United States. Yet you wouldn't really know it by looking at these charts. As you can see, we've got 3 out of our 4 charts still with a strongly bullish posture. Most of them are very close to all-time highs. In fact, just yesterday we hit all-time highs on the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite. So whether your concern du jour is China or whether it's the Delta variant, stock market's taking it mostly in stride here in the United States. Now overseas, that's a completely different story. We are seeing I think if I heard right on CNBC earlier today, like $180 billion worth of market cap wiped off of some of the most well-known and well-traded Chinese companies here in just the last couple of weeks. So that is a major development. And while those Chinese companies are not necessarily in the S&P 500, you have to remember that China represents a very important end market to a lot of American companies, including Apple and Starbucks and others. So we definitely want to keep our eye on that story, and hopefully temperatures will cool off, and the symbiotic relationship we have with China, where they need us and we need them, hopefully that can work nicely in the years and decades to come, at least for investors' sake. We'll see what the next move is in that chess game, but right now things have kind of heated up there, and markets have somewhat recognized that and sold off in key areas like the emerging markets. But luckily here for us in the United States, we've been taking it mostly in stride. The Russell 2000 is the only one that differs from a posture perspective, where you'll notice here that we do have this dark pink background color on the Russell 2000. So as of today, we now once again have a strongly bearish intermediate posture. So for those of you that are newer to this video, be aware that the background colors are a way to kind of color coordinate what our posture is using that market forecast technical indicator that you see below each of those 4 charts. And unless we tell you otherwise, the posture that we're referencing is the intermediate posture, which represents the green line there. So like in the S&P 500, it's in the upper reversal zone. That's a strongly bullish posture. And the same thing can be said here for the Dow and also for the NASDAQ composite. Notice the difference with the Russell 2000, which is the small cap index here in the United States. You'll notice that the green line has now started rolling over. I know that's hard to see with a naked eye, which is the entire point of us color coding the background of these charts with computer programming language to let you know that while it's hard to see right here because it looks like it's flat on that green line, technically it has rolled over just a little bit there, and we are back to that strongly bearish posture. So this might be an area where you could get filled on a nice bear call spread on the Russell 2000. I know I've done that a couple of different times in recent months during this presentation. Don't have one on right now, but I must say, licking my chops at that candle right there today, and the conversion from bullish to bearish posture, along with the downtrending 30-day moving average right there. So we'll keep our eye on it, but it is a kind of a diverging market right now, where you have the mega caps kind of leading the way higher, and then you've got the small caps kind of struggling to a little bit of a degree. Let's go ahead and take a look here at our 3 green arrows chart now. This will be chart 4D for those of you that are premium members following along at home. Now remember, the background colors on this chart are going to signify something slightly different than on the last chart set up there. In this case, a green background color will suggest that we have what's known as a 3 green arrows signal, which is basically looking at 3 different technical indicators and looking to see if they are all lining up bullishly at about the same time. And so you can see that with the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite, we do have a 3 green arrows signal, as the background colors are green there in that case. With the Russell 2000, notice the background color is currently white, which signifies we have a mix of green and red arrows. With the Russell 2000, we do have a green arrow on the MACD histogram and also on the stochastic. However, we do have a red arrow that's still in place going back here to July 6th, when that particular index closed below its 30-day moving average and has continued to trade below that area going forward, whereas the others continue to trade above those moving averages. So all else being equal, the path of least resistance continues to be to the upside for those mega caps for the time being. Now, as mentioned before, tonight was a huge night of earnings, and that does have the ability to impact markets generally, especially when you're dealing with the biggest market cap companies out there, and that certainly describes this afternoon. So let's spend a little bit of time going through some of the key earnings reports here. And the first one we'll talk about is Apple. And Apple is down a bit. You can see here it closed the normal session at, hang on just a second, there we go. It closed the normal session at 146.77. You can see as we're recording right here, about an hour and a half after the market close, it is trading down at about 143.57. So we're down about $3 per share. Now you can see over here in some of the headlines, excellent numbers, and that's, kind of, it's going to be a theme as I roll through some of these names here, is that most of these companies produce stellar results. Now we do have to remember that a year ago we were in a completely different place economically speaking, so we should assume that the results will come in pretty strong. It's just a matter of whether they beat or meet expectations or not. And so right now, with Apple so close to an all-time high of $150, markets are maybe giving an opportunity for this to breathe a little bit, taking their profits here just a touch on Apple, despite really strong numbers right there. And by the way, with Apple, of course, being the world's largest publicly traded company, it's going to have an influence on something like the S&P 500. So if we were to look at just the SPY right now, you can see that we closed on SPY, which is an ETF that tracks the S&P 500, at 439.01 on the normal session today. Notice that right now we're trading down at about $437.40. So all else being equal, unless we have some sort of a turnaround between now and tomorrow morning, right now it's looking like there is some pressure, some selling pressure in the futures markets after hours, mostly as a result of what we've heard from some of these mega names. Speaking of giants out there, it's not just Apple. Microsoft is right there neck and neck with them with those trillion-dollar valuations. And you can see here that Microsoft really disappointed. With Apple, that was not that big of a deal to see it down $3 per share after hours. But with Microsoft, it's down here kind of pushing the lows. So hard to say where we end up with this one, but it is a little bit unfortunate to see it down about $7 after hours there. So again, not the end of the world. These are larger priced companies. So we do have to remember percentages are different than just dollars and cents. But obviously another situation here where the stock market was not overly enthusiastic with Microsoft's earnings. Now on to one of the more positive stories, and that is Alphabet / Google, however you want to call it these days. They absolutely erupted in terms of their operating metrics after hours tonight. Now the stock is following in kind. You can see that with this particular share class, the Class A shares here, that they closed the session at 26.38. We are currently trading at around 27.15. So we're up not quite $100 per share after hours, but in that vicinity. And it was up over $100 per share at one point at the highs of the after hours session when it touched 27.75. So they had amazing results coming in. You can see some of these numbers broken down by their various units over here in their cloud division. Just as one example, saw the sales grow 54%. But there were some other remarkable numbers that came in here where we were seeing that a lot of their business units up, in some cases like 80% year over year. And we're talking about massive, massive numbers here. Remember, this is the company behind YouTube. So I'd like to think that David and I are, putting our little effort into making Alphabet a more substantial business as we post our videos here on YouTube as often as we do. But all joking aside, very happy to see Alphabet making a big move higher. Many of you that attend my top-down trend trading class, for those of you that are Premium and Plus members, you'll know that Google has been one of our bigger winners in the last year or so. I think we actually bought it about 13 months ago, but we're up about 95% on our trade at this point. And it's possible that tomorrow will represent our double day if we have a big enough burst out of the gate, in which case we will then add our 8th coffee can stock within our top-down trend trading portfolio, or in other words, stocks that have doubled for us here in the last couple of years, where we sell half of our holdings and play with the house's money on the rest. So let's all put some good vibes into Alphabet's share price here in the coming 24 hours. But right now, we're off to the races in the right direction to the upside with Alphabet. Another big player out there these days is Visa. You can see that Visa came out with their earnings after hours. And you'll notice here that Visa also is unfortunately suffering or down just a touch. Again, not a big deal. It's down about $3 per share after hours on a big $250 share price. That's not the end of the world, but just goes to show that there is a little bit of disappointment in the air tonight. And that's why we're seeing the futures down just a touch from where we closed the normal session. Another stock that's volatile after hours is Starbucks. This is a company that, of course, does a lot of business in China, so perhaps investors growing maybe a little bit concerned with the prospects of what may or may not happen over there. But right now, you can see that Starbucks is down about $4 per share after hours. Another one reporting is AMD. This is Advanced Micro Devices, and you can see here that Advanced Micro Devices is basically flat. It closed the normal session at 91, and it's just maybe 30 cents higher than that as we speak right here, right now. And then one more that we'll take a peek at here with MDLZ. This is Mondelez, one of the biggest snack companies out there. For those of you that are Oreo cookie fans, this is the company behind that. That was spun off from Kraft Foods several years ago. Anyway, this company also suffering after hours. It closed the normal session action at about 65.23, and it's trading just a hair below 64 at this moment in time. So you can see as we rolled through all of those that we had quite first of all, from a market cap perspective, quite the massive swath of companies that are reporting, a very important night. Remember, we're also going to get Facebook and Amazon here very quickly as well in the next couple days. So this is a big week for earnings, but this, without a doubt, there's a bit of a selling type of a feel to the after hours activity today. So we've got a lot to overcome before we get to tomorrow morning and we reopen the stock market again. All else being equal, it looks like we might have a little bit of a down open there. Hopefully, Google and others can kind of offset some of those losses from Microsoft and the like, but right now it's not looking so promising. Let's go ahead and take a quick peek on over here to the internet. I always like to get a chance to say thank you to those of you that help support this project. Last time I did the video on Thursday, you guys helped support me greatly. It was 107 of you that clicked like for us there. I'm always trying to hit those triple-digit likes there on Twitter to make it nice and easy for you. We do have 4 different ways that you can find those tweets. You can either find them pinned to the top of our timeline. You can find them directly underneath the video and just click the heart button down here. For those of you that watch it on our website at marketscholars.com, you'll also find the link to the tweet in the description area underneath YouTube for those of you that go to youtube.com to watch our video. And then also you can find the link to our tweet on our emails that we send those of you that are on our notification list there. So 4 different ways where you can find that to help support us. That's all we ask out of you. Right? Pretty basic trade-off there. We'll give you a few hours of our time during any particular day. All you have to do is give us 5 seconds of your time in return to help support this free video here to get this content as often as possible. Also, I taught some classes today. I mentioned earlier I taught my dividend growth investing class. And so for those of you that are Premium and Plus members, you're welcome to check that out. The recording has now been posted. Today was a bit of a different class. For those of you that have maybe not been to my dividend growth investing classes lately, today was a bit of a surprise in one of the companies that we featured and that we actually ended up buying. And it's a company that most people have never heard of, yet it has a dividend streak of over 10 years in a row, and it really benefits as the usage of internet increases as the years go on. It plays a very prominent role in that aspect. So if you're intrigued by that idea, feel free to check out my recording right there that is posted, and it looks like David's directional option strategies class is pending right now, so imagine by the end of the day he'll get that recorded there as well once we get the file back from WebEx. Tomorrow morning I've got my factor-based swing trading class coming up at 11 a.m. Eastern Time, and then David's got his options inventory trading coming up at 2 p.m. Eastern Time tomorrow. So lots of great stuff on the horizon. Speaking of the factor-based swing trading class, here's last week's factor selector. Of course, I'll post another one here tomorrow morning in preparation for tomorrow morning's class. But last week we did have quality leading the way once again. Dividend yield was on the downside. However, I did just get done looking at some of our numbers, and I do see that there will be a new bottom, or number 6, factor that we'll be looking for short selling opportunities in as soon as tomorrow morning's factor-based swing trading class. Also, I should mention that for those of you that haven't been to one of my top-down trend trading classes here recently, yesterday's class, Monday's class, would be a good one for you to watch the recording of, because there's going to be a slight change in how I rank the stocks in terms of their relative strength, and you might be interested in hearing about why I'm making that change and how that may affect us going forward. So if you missed yesterday's class, feel free to check that out again on our calendar here on our website. Just click the Trading Rooms tab at the top, and that was the class right here, the top-down trend trading class on July 26th. All right, let's get back on track with some more charts over here on Thinkorswim, and let's do some 12-grid analysis to see what's been going on, first of all, with the asset class 12 grid. Reminder that the background colors that you see here will basically show you what the posture is currently for each of these entities on an intermediate posture basis using that market forecast technical indicator. You can see that we've got a lot of green on the board right out of the gate, but one clear area of disruption is right up here in the top rung. This is EEM. Most of you are familiar with that ticker symbol. It's usually one of the more efficient ways to tap into the emerging markets from an ETF's perspective, and that thing has been absolutely getting waxed here in the last couple of weeks, mostly as a result of China. Remember, China is a massive portion of the overall emerging markets, and so they're going to have a much bigger impact on the emerging markets than basically any other country that's out there. So if there's something very specific that's happening to Chinese stocks, either good or bad, it's going to have an overwhelming impact on EEM. And as most of you are aware, there's been a lot of really ugly price action in those Chinese stocks here recently. It feels like it kind of started a few weeks ago with the DDIPO, and then we saw last week how they had the idea that they're going to basically take a for-profit education business or industry and make it not for profit just overnight. And of course, that negatively affected a lot of those education companies that are over in China. And then we've heard a lot of other chatter about restrictions with music rights, with Tencent Music. We, of course, all heard what happened last year with the Ant Financial IPO that was owned by Alibaba, and then kind of the shutting down of Jack Ma and keeping him out of the spotlight. So there's been a lot of funky things that have been happening with Chinese securities here recently, and it doesn't feel too comfortable for folks who have a big allocation in that particular area. And this chart right up here describes that story in general. But there is maybe some good news here. And that good news is that things have gotten so bad that perhaps there can be a little bit of light at the end of the tunnel. We do have what's known as oversold cluster signals that have started to appear here on this chart for EEM. So let me right click and go to maximize sell. You can see down below those little green dots appear when we get the three colored lines in the lower reversal zone all on the same day. So for the last 2 days, both yesterday and today, we do have those green dots appearing there, telling us that things have gotten a little bit overboard on the selling side of the equation, and odds are setting up greater, and it's not a guarantee, there's nothing 100% in this, but there's greater odds setting up that there could be a snapback rally here. Now, before you get too excited, a reminder that just because the odds are greater that we get a snapback rally does not mean that we change the trend. I think there's always some confusion around that point, that people like to look for these clusters and they just think that, oh, okay, we're going to go back to La La Land and everything's just going to be rainbows and puppy dogs, right, going forward. But the truth is, a lot of times what happens is we get this massive spillover in selling where sellers overwhelm the buyers. And then we get this snapback rally that takes us up kind of in the vicinity of that falling 30-day moving average. And then a lot of times we end up failing there again, and we just continue to go into that downtrend. So sometimes they do break out into a new trend, but don't get your hopes up there unless we hear some dramatic news out of China. In this particular case, that would be positive towards the financial markets. But right now, I think people are playing it safe and just approaching those markets very, very cautiously. So could we get a little bounce here out of the emerging markets in the near term? Yeah, it's possible. Does that lead to a massive rally to go back to all-time highs here in the next couple of months? In my opinion, probably not, but we'll all find out together. Just be aware that we do have those oversold cluster signals showing up there. Otherwise, the charts don't look all that bad. I would say that gold does not look all that appealing. Remember, we still have the bearish gold trade going for the presentation I did here a week or two ago for this video. So that doesn't bother me to see it riding that moving average downward. But be aware, the background color on the gold chart is now back to that light green color, meaning that we do have a weekly bullish posture. It's not strongly bullish, but it's weekly bullish. So perhaps some of the bulls are trying to be a little bit more stubborn there behind the scenes and just not letting it go down too dramatically. In terms of what the best looking charts are here, I would say from a trend continuation perspective, I like the SPY chart, and I also like the BNDX chart. Now, remember, BNDX is the foreign bond chart, and it's a really strong looking chart right now. I know you don't really get too excited about bond trends, but hey, they're not going to ask you questions when you're cashing your checks down at the bank where you got your profits from. You don't have to feel embarrassed about making money off of the bond market. Right now, the foreign bond market is attracting some investor inflows, and we are seeing the charts respond to that positively. We are at 3-month highs for the foreign bond market as we speak right now. So those two are, I think, the best looking from a trend continuation perspective. I will also throw in Bitcoin as kind of an honorable mention here. We want to keep our eye on this situation with Bitcoin. That's the chart all the way over to the right-hand side in the middle rung. I do like this behavior we've seen out of Bitcoin in the last week or so. Notice that ever since having this massive meltdown here in early May, that this is a security that refused to close above that moving average. It approached it a few times along the way, just couldn't quite get the oomph to get up and over it. Well, we were able to do that easily here on Monday. Now, we did find out that a lot of it was as a result of a story that really doesn't have a lot of validity, with the prospects of Amazon perhaps accepting Bitcoin one day. Nonetheless, it did at least kind of stir the pot enough to push some positive momentum back into that particular security. And remember, when Bitcoin gets moving, it can move in a hurry. So keep your eyes on that area. You might end up finding some bounce possibilities there. So obviously, the chart doesn't look nearly as strong as foreign bonds in the U.S. stock market. But if you're somebody that would prefer to play the bounces as opposed to breakouts, you might have that ability to have a trade set up here to the upside on Bitcoin and put your stop losses somewhere down below these lows that were in place from a couple weeks ago. All right, let's go ahead and take a look here now at our sector 12 grid. This will be chart 5C for those of you that are following along at home. Now here we got a clean sweep of green. Again, it's a little bit peculiar to me because it doesn't really feel like markets are roaring to the upside. We've got a lot of news to concern ourselves with right now, but for the most part, large cap companies in the United States are holding their own pretty nicely, and this kind of describes that right here when you see all this green background. Remember, that means we do have bullish postures across the board. Some of them, like materials and energy, are weakly bullish, not strongly bullish, but nonetheless, at least we've seen some buying off of the lows that we've seen in recent weeks there. And again, notice that energy had those oversold cluster signals, as did materials. And so we're now getting that reversion to the mean bounce. Right now, materials are looking a little bit stronger. They were able to at least close above that moving average, but energy still looks a little bit dicey here. Even though the sellers came in force in the last month or two, I'm just not sure this has the oomph to get back up to that moving average. So we're going to keep our close eyes on energy there. In terms of what charts look the strongest from kind of a continuation perspective, we had this conversation quite a bit in my class yesterday, in my top-down trend trading class, which is a sector rotation class, where we kind of take our clues from the sectors to then trade the stocks within the sectors. That's where we own Alphabet, by the way. Anyway, we were having the conversation then, and I'll reiterate it now, that the three charts from a sector perspective that look the strongest to me are real estate, which is the chart in the lower right-hand corner, healthcare, which is the chart in the lower left-hand corner, and technology, which is the chart in the upper right-hand corner. And if the S&P 500 were its own sector, I'd probably say the S&P 500 also looks good. So interestingly enough, it's the four corners in this case that I think have the strongest trending charts at this moment in time. So if you're looking for trend trading opportunities, it tends to make sense in my head to look within those particular areas right there. But there's plenty of good-looking charts out there as well. I should mention that despite markets being down in general today, the utilities perform quite well. Utilities were up 1.72% and are actually up here pretty close to their 3-month highs all of a sudden. Remember, it wasn't too long ago when they were giving you these oversold cluster signals that it looked like a pretty ugly chart, and this thing is doing its best to maybe pull off a head and shoulders pattern here, with this being the left shoulder, this being the head, this being the right shoulder. Who knows? Maybe we get a breakout to the upside in the utilities. Real estate is at a new 3-month high already. I should also point out that consumer staples hit a new 3-month high here today, and I think actually did close at one there as well. So not a lot of press behind the consumer staples, but like the utilities, they've kind of behind the scenes started to work on a little bit of their own bullishness here all of a sudden. And that does lead me into tonight's trade application example. So the first chart that we'll look at here, well, we might as well just pull it up here on this chart. So I'm going to maximize the consumer staples chart right here because it will come from the consumer staples area. And again, there is the breakout today on consumer staples over the last 3 months. And we did close at the highest close over the last 3 months as well, with the prior high close would have been back here on June 4th. So we had a little bit of a breakout there on consumer staples. But the stock I want to trade within the consumer staples is Smucker's. And here's the Smucker's chart. You can see, first of all, we are back to a bullish posture. Now, it's not a strongly bullish posture like we see with the consumer staples chart in general. It is a weekly bullish posture, but nonetheless, you can see that the green line has started to rebound and go higher here. So it's at 33 and rising. Remember, when it's between 20 and 50, we consider that to be weekly bullish. You can also see that with today's move, Smucker is back above their moving average. Now, the moving average is trending lower, so obviously, every trade comes with risk. This is not one of those trend trading setups that we're looking at here. This is one that's kind of trying to work its way off of, hopefully putting in a fairly strong support. You can see that it had a bit of a triple bottom here. If you were to look at this candle on June 24th, also July 6th, and then also again on July 22nd, we got down into that same area and then bounced each of those times. And so wondering if there's some buyers that are down in that area for Smucker. Now, the other reason that I wanted to look at this is based upon its dividend. Smucker's is a company that has more than 20 years in a row of dividend increases. So it's not quite a dividend aristocrat list, which would require 25 years, but it's in that vicinity where we very well may be looking at Smucker as a dividend aristocrat in the coming 5 years. And you can see that they recently raised their dividend. This is the dividend stair-step chart. This is what we use in my dividend growth investing classes. Chart 2A for those of you that are following along at home. And what this chart is trying to tell us here is where are more acceptable levels to be buying the stock for the long term and where are less acceptable levels. The blue area is where we want to be buyers, and the orange area is where we don't want to be buyers. I rarely say we want to be sellers because that suggests that we have an interest in selling our business ownership, even if they get overpriced, which is typically not how I teach it to my students. But nonetheless, you can do what you need to do with that information. For my purposes, I'm looking for a company that's willing to pay higher amounts of dividends through thick and thin as time goes on, and nothing is more basic than peanut butter and jelly. Now, keep in mind that Smucker also has a coffee business with Folgers and also a pet foods business. So a few different things that maybe not everybody is aware of there, but definitely a basic consumer staples company that doesn't create a whole lot of excitement for a lot of folks. Well, you can see here that with their most recent increase, it was a pretty healthy one, by the way. It went from 90 cents to 99 cents. So we're talking about a 10% dividend increase there. For those of you that aren't familiar with the dividend growth investing world, a 10% increase, particularly on an old school company like this, is actually considered pretty strong, particularly if the company already has a pretty decent yield, and this one does. Its yield right now is right around 3%. We like to buy these companies when they get into the blue zone, and the blue zone is different on every single dividend stock. For Smucker's specific case, we want to buy it when it has a yield of 2.91% or more. So some of you might make the decision to buy the company right here, but they don't actually pay their dividend for a couple of weeks, which is why you see kind of this blue line jutting higher here to the right of the current candle. It's because just the way that the ThinkScript works is it doesn't adjust the chart until that dividend officially gets paid. So although they've already announced that 99-cent dividend, it's not going to get paid until August. So anyway, right now we're kind of in one of those in-between zones. So some folks could make the decision just to buy the company outright, and I don't think there's anything necessarily wrong with that. But what I opted to do with today's trade application example, which of course has already been done, I already sent out the notifications and the execution prices and the strike prices and all all that stuff to those of you that are premium members on our Telegram app at Market Scholars. So it was done already during the trading session today. But what I did was I sold the $120 put. Now, when you're a put seller, that means that you have a slightly bullish trade where you make money if the stock does not go down below, in this case, $120. Now, if it does go down below $120 between now and my expiration for the month of September, then that means that I would have to be on the hook for buying 100 shares. And at $120, I view that as an acceptable value territory, which would be well in excess of a 3% yield. In fact, it would go back to last year's 3% yield area, which was at that $120 dollar level. That was before the most recent announcement. The current 3% yield area is 132, which is exactly where we closed here today, by the way. I was able to collect about $1.20 for doing that trade. So in other words, I took in $120 for my willingness to buy 100 shares of Smucker at $120 if push comes to shove in the middle of September. So we typically only do this strategy on companies we really want to own. And that is the strategy that I implement in my Monday afternoon Options for Long-Term Investors class, where we have a 17-month winning streak, where we've been going for a very, very long time without losing trades. And so this is kind of that same technique that I would teach to my class there on Mondays. And many of you that have been in my question and answer classes here recently as premium members will know that I typically try to sell puts on days where the stock market is down at least 1%. And at today's lows, the S&P 500 was indeed down more than 1%. It's on those days when everybody else is panicking, throwing babies out with the bathwater, volatility rising substantially, that I want to be the seller of premium on companies that I admire, that I wouldn't mind owning for the long term. And I think Smucker's represents a pretty good example of that. So that's your trade application example here for the day. I hope you got value out of checking out tonight's Market Outlook video. If you did, I ask one simple thing out of you. Just simply go on over to Twitter and click like for me there, or access that particular tweet through the various areas that I had mentioned before. That'll help ensure that these videos get done again in the future. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.